So if you think about taking $30 trillion out of the global economy, you're talking about almost, I think it's 85 trillion is the world GDP. So like, it's almost half of an entire year's worth of global GDP. It's going to take 3 years probably. So it seems like we're at the beginning of something that's going to be long and drawn out.
Hello and welcome to Wealthy Value. In today's video, venture capitalist, SPAC sponsor, and founder and CEO of Social Capital Chamath Palihapitiya shares an updated outlook for the economic markets and Fed's most recent decisions. He speaks about the crypto collapse and its impact on the global economy, along with the worst-kept secret in crypto. Chamath also updates about the key reasons why economy is in a bad state and why the next 3 to 5 months of CPI will be very bad. Make sure to stick around till the end of this video where Chamath reveals why he thinks the market bottom doesn't happen for another 18 months. If you like the video, don't forget to give it a thumbs up, subscribe to the channel, and turn on the post notifications. Let's dive right into the video.
The thing that you have to do before you talk about what is happening now, I think it's probably useful to go back and you have to really start at the end of the great financial crisis. And the reason is there was a bunch of people coming out of the GFC who confused what the US government and some European governments were doing. At the time, there was the risk of a huge financial contagion. And so the US stepped in and the Federal Reserve started to use their balance sheet to buy toxic assets, right? And the ECB did that, and I think Japan did that as well. Anyways, a bunch of banks did it. A bunch of governments did it. And then there was this body of pseudoscientific economists who coined this thing called modern monetary theory, which basically said, hey, you can keep printing money and introducing it into the economy to smooth things out and to actually drive long-term growth. And it turns out that a bunch of government officials fell for it. And if you fast forward to 2022, so 14 years later, governments around the world had printed something to the tune of about 35 odd trillion dollars of money into the economy that should have never been there. So the thing to remember is, like, we have not necessarily just been obfuscating true supply demand in the last 6 or 8 months when we've been talking about a recession or inflation. We've been actually doing it since 2008. It's just that it's been building up in the system. So one of the things that we have to realize is that all of that money somehow needs to get destroyed in some way, shape, or form if the true economic equilibrium is meant to be found. What is true supply? What is true demand in the absence of government sloshing money around, trying to prop up things that should not be propped up, or buying votes, or all the grifts that these folks have engaged in the last, decade and a half have to get undone. This is my understanding of the scam because it was explained to me. You put in a little bit of equity at some crazy price, and then you get these tokens, and apparently there's no, you can just sell these tokens day one. And so what happens is, you price the equity, but it's meaningless because really what you're getting is the right to get some amount of these tokens. The price is crazy, you sell it, and then you just kind of walk away. There's an article, I think it was in Bloomberg, about folks trying to figure out how to get a lawsuit filed against Binance. And the problem was that they didn't even know what entity to sue. So if that's what's happening in a $1 trillion market, there's,
it's going to be a lot of pain.
It's a lot of oversight. I think we have to also be sensitive to the fact that the Fed operates on a certain class of data. And that data in the 21st century is pretty pathetic. Nick, you can probably find this, but there was an article, I think it was in the New York Times, that really walked through how CPI is calculated. And it's a bunch of people that work for the government that walk around with iPads, building relationships with local businesses in all these random places all around the country, and asking them to, chit-chat for 15 minutes and do these surveys. Now, you would have thought that in 2023 or 2022, what the government would have said to, Visa, MasterCard, American Express, all the payment rails, the banks, and Stripe is, send me a feed in the following structured way so that I can actually have an absolute precise sense of inflation, because inflation really only occurs when a good or a service trades hands for money, right? And you calculate what did that thing trade at the day before and what does it trade for today. I think you need to buckle your seatbelt because the next 3, 4, 5 months of CPI will probably be very, very bad. 7, 8, 9%. Why? There are a handful of components that have gotten completely run away. Number one, the biggest one is rent. And so rent works on a 3-month lag. We're going to reintroduce what the true owner's equivalent rent is into CPI. So we can already forecast that CPI going up. Oil is at $105 a barrel. Russia is basically trying to break the back of Europe by now messing with their nat gas supplies. The German energy minister yesterday said that if that happens, it could be a contagion equivalent to Lehman Brothers with respect to energy. When you play all of these things out, what you have is unfortunately rampant runaway costs that really have no mechanism to get back in check in the absence of some real governmental changes. Our policy on this Ukraine-Russia war, how we intend to sort of work or cooperate or fight with China, all of these things have to get solved. So in the absence of that, prices are going to continue to go up. And so what does the Fed do? How does it throw away what little credibility it has left when there's 8 and 9% inflation prints and saying, we think we're done for right now? You can't do that. So they will overcorrect because there's just going to be so much pressure for them to act. I mean, it's the worst kept secret in crypto how much insider trading is going on amongst the organizations that run the exchanges and their side pockets that they use to manage liquidity. I mean, it's the biggest thing that's been happening in crypto. It's not illegal to front run crypto trades. So most of these organizations that run an exchange, right, compete for order flow, and they're able to just look at that order flow and then they front run the trade and they're on the other side of that. So they're always making money. And so they were making tens of billions of dollars. Speaking of China for a second, we talk and we bloviate about our desire for energy independence, and we exclude Tesla from any sort of major meaningful legislation. We trumpet these companies that are just completely woefully behind in building energy independence. We think about like a gas tax holiday, but as like kind of like a something that still needs an act of Congress to pass, even though Congress has said they have absolutely no intention of passing it. Meanwhile, we keep losing our footing to China. Just today, CATL, which is one of the largest battery manufacturers, announced a pretty meaningful improvement in their 3.0 battery design. These guys are now building batteries that can go 1,000 kilometers in both of the major compositions that really matter, NMC and LFP. And I just look at these things and I'm like, wow, we cannot actually get capacity funded to build domestic battery capability because we're too busy kind of basically virtue signaling on things that don't matter. And in return, nothing happens. China continues to lap us. It's a really bad state of affairs. We are in a very odd period in terms of government effectiveness.
So what are your thoughts about Chamath's outlook on market bottom? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.